All right, let's get straight into this. As you guys know, you can see the S&P here. Today we didn't have anything all that exciting. On the one hand, those who know of course we had a bit of a gap open up today earlier in the day. Let me show that so you guys can see without all the nonsense on top. So it's going to be naked and clear. So as you can see, very much we opened up this gap from around 6,600 $25 to roughly around, at the end of the day, call it 65.57 arguably. Now in a second we're going to look at the regular charts we usually look at, and where we're going to recognize some of the support and resistance levels you're more accustomed to seeing on my charts. But this is sort of what we opened up today. We moved mostly sideways, then ended up filling in the gap at the end of the day. Although we did spend most of the momentum was spent moving sideways, didn't really do anything with regards to the gap almost until the close of the session. We did get that gap filled in. I did warn, by the way, those who are not familiar, that from now on, given where we are in the cycle and how the price action may end up not closing all the gaps right now, the momentum and the cyclicality of where sort of there is a rhythm to the market. Those who know. Of course, those who don't know, of course, join the community. You'll know all, because I teach all about these things, about the harmonic patterns, the cyclicality of the market, momentum, and so on, and various other tools that allow you to read the price action and sort of assess and analyze where we're headed from here on out. As you can see, even evidently so, without having any tools on top, we can see we've been moving in this very narrow channel sideways right here. Nothing all that sort of surprising, pretty evident even to the naked eye. In fact, that channel was tested as we entered that channel right here on the bottom. Of course, I know it's not all that straight if you really want to have it tremendously straight, so everything will sort of make sense to you. That is the trajectory we had right there, give or take. You're like, Greg, but the price action broke below. Yes, the price action can do that. It's not that abnormal. In fact, arguably, I will tell you that our actual support resistance level on the upside, on the higher end, it appears to be somewhere around there. But of course, as you can see, the price action did end up slipping through, arguably, of course, and that's kind of a normal behavior of the price action. That's just how the market behaves. That regular ebb and flow, we do tend to get carried away. The momentum does not always subside right perfectly at the channels of support and resistance levels. There are other multiple forces that are affecting how the market plays out and what ends up stopping it. So let's quickly go back to where we're familiar. We're seeing our sort of our more regular charts that we're more accustomed to. As you see, 6,000 was tested today from below, from below the 6,000 level and from the top of it. So we kind of acknowledged its location, if you will. We have done that before, nothing all that surprising. Of course, moving within the framework of the channel as we were progressing through, acknowledging that 6,000. On the 1 minute and 5 minutes, the momentum is not all that interesting. At the end of the day, that's kind of, it is what it is, right? So let's look at the 30 minutes. 30 minutes is having confluence, so we're potentially retesting this channel given how the setup is on the 30 minutes. I would argue that on the 45 minutes, as you can see, we're still bullish. We're probably going to continue higher, break through that level, and even test up to that yellow level that we have, the diagonal sort of median from a major different larger trend. Of course, here we appear to be tremendously bullish, which does confirm a continuation of the movement to the upside. Of course, just sort of a retest, a little bit more, you know, time wasting, if you will, within the same levels. Does not mean we're going to result in an actual movement. More so, just kind of spend time back and forth. Potentially, as you guys know, what that sort of results in, a little bit more sideways, a little bit of retests. But the overall momentum, this is where we're getting to, is a lot more bearish. As you can see, in fact, it's getting worse and worse by the minute, or by the day, if you will. Our weekly is significantly bearish and accelerating more so downwards than where we are objectively bearish dominant in oversold territory. Our monthly is having very clear, strong divergence, moving closer and closer to that 80 range, which does imply that this overall. So basically, everything we saw inside those smaller time frames is just the internal movement, the more just internal movement, if you will, more day-to-day ebb and flow, what you cannot identify throughout seeing the larger candlestick, because all of it is simply engulfed inside of it. Those smaller interday movements, this regular ebb and flow, is what makes up together that larger candlestick that we're seeing on the monthly. And of course, the more overall bearish momentum we're going to see throughout the shorter time frames, the more that will exacerbate and play out into the larger time frames, as you guys know, will sort of affect that. And that's something I've been warning about for quite some time, by the way, how we are on the 3 months now having confluence, and the price action is a lot more bearish, as I warned it will be. As you see, we're moving downwards. So and now in fact the cyclicality of the larger time frame appears to be transitioning into bearish conditions, and the more bearish it will be, the more we will experience that bearish momentum. This is why I'm saying, and have been saying all along, that the price action will be dropping as low as 3,300. Basically, I knew this moment will come. We were building up towards it for quite a long time. This was the expectation, and now, although you've seen some of these shallow corrections, some of less shallow corrections, doesn't matter. All of them were within an uptrend. Now that will be a major downtrend. This is where the difference is. Again, if you go to the 6 months, to the half-year chart, you can see we're having confluence. So basically, the bearish cycle is just getting started, boys and girls. And I'm not going to tell you how long it's going to take, because that's not what technical analysis is all about. Technical analysis is not attempting to time the market, nor identify exactly the particular sort of day or month that the bottom or the top will occur at, but rather the destinations we're moving towards. Okay? That is it, boys and girls. Those who are not yet familiar with the community, definitely join in the Discord, where I update my members on a daily basis. There are various videos, if it's members exclusive content, if it's our casual chat on a day-to-day basis. We discuss anything and everything, of course, charts and so on and so on. My charts that I inform everyone on a daily basis as we progress, basically every single day. What is important to highlight? Very important to highlight. How I was saying that we were gonna correct back to 6,600. Actually, a while back, I was kind of making fun of that just the other day. If only someone could have known, a while back we're gonna be correcting back to 6,600, and so on and so on, various other sort of aspects. As you see, I kind of make fun of it all. That I did actually predict all that a while back. Of course, definitely join the Discord via the Patreon. Follow me on X. All the links are in the description below and all that beautiful stuff. The Patreon right now is 30% discounted. Basically, the initial price, the eventual price, sorry, when the discount will expire, it will be $99. So now you can either sign up for $70 a month and be in the know, be up to speed, know proper technical analysis if you wish to invest your time and effort and actually learn how it's properly done in the One Academy, where I teach how it's done. Or you can also make it even cheaper by clicking this little ticker, 20%, and then, of course, instead of paying $70, you pay only $56 a month, and you are up to speed on where the market is headed. Doesn't matter whether you're an investor or a trader. Everyone alike needs this sort of information to be able to decipher where the market is headed. That's it, boys and girls. As always, I'll see you on the next one. Bye for now.